Hello and welcome to the College Investor Audio Show. Today, we are looking at the topic of Earned Income Tax Credit for 2023, what it is, and how you can qualify for this. By the way, this is pulled directly from an article at thecollegeinvestor.com. I'm going to mention some resources today which you can dive right into and dive deeper so you can learn about all things Earned Income Tax Credit. But let's get right to it for today's show. So the Earned Income Tax Credit, or EITC, is a tax break designed to help those with low to moderate incomes. It's especially intended to benefit working parents who fall within those income ranges. The EITC is not applied to your tax return automatically. Instead, you must take the appropriate steps to claim it on your tax return yourself. So taxpayers have up to 3 years to claim the EITC. If you're just learning about it and maybe you think you might have qualified in previous years, there may still be time to claim it from a previous year. So today we'll go over what the Earned Income Tax Credit actually is and how you can qualify for this. First of all, what is this thing? So unlike many other tax credits, the EITC is a refundable tax credit. And that means that you always receive the full value of your credit, even if it exceeds your tax liability. If your income tax bill is lower than the EITC dollar amount, you'll get a refund from the IRS. It's pretty cool. For example, so imagine that someone qualifies for the EITC amount of $6,604 and owed $4,000 in income taxes. With a non-refundable tax credit, the max benefit would be $4,000. Since non-refundable credits aren't able to bring the taxpayer's tax liability under $0. But as a refundable credit, the EITC would be able to provide the full $6,604 benefit by sending the taxpayer a refund check for $2,604. The EITC is a federal tax credit only. This means it will not apply to state, city, or county taxes. In some cases, it may also not cover Social Security taxes. It's really only meant to reduce federal income taxes. All right, so how much can you actually receive with this thing? The EITC ranges from $600 to $7,430 for the 2023 tax year, which is what you file in early 2024. The figure varies with income, filing status, and if you have qualifying children or not. We have a table you can dive right into inside this article at thecollegeinvestor.com. Talks about children, earnings, and earnings filing jointly, earnings filing singly, and even your max EITC. It's all laid out in a chart form. So just a quick example though. If your income was $40,000, you filed single and have one qualified child. Your maximum EITC would be $3,995. Well, keep in mind though that some of the income levels are only slightly above the poverty levels listed by the Department of Health. For one person, the poverty level is an income of $14,580. That's just below the $17,640 maximum income for a single filer with no children. So keep those things in mind as you consider the EITC. Let's talk about who qualifies for the Earned Income Tax Credit. The EITC is available for both employed and self-employed people. We just have a real quick list of criteria that you have to meet to be eligible for the EITC. You must have earned income. This is income from some form of employment, including self-employment. Dividends or investment income, pension, even unemployment benefits are just not eligible forms of income. Valid Social Security number issued for yourself and any participating spouse or children. Investment income of $3,650 or less. Filing status of married filing jointly, head of household, qualifying widow or widower, or single. It's not necessary to have children for the EITC either, but there are certain criteria for claiming the EITC without qualifying children. These requirements also apply to any spouse that you're filing a joint return with. You meet all of the EITC basic rules that we just listed, and you have your main home in the U.S. for more than half of the tax year, and you cannot be claimed as a dependent or qualifying child or on anyone else's return. and you are at least 25, but under 65 at the end of the tax year, usually December 31st. So if you're claiming the EITC with a child, either as single or with your spouse filing a joint return, the child must meet all of the qualifying rules. Since qualifying a child is more involved, it's best to use the IRS EITC assistant. All right, now let's talk about who's ineligible. In addition to the income levels we talked about, other criteria might make someone ineligible for the EITC. Filing married separately, being claimed as a dependent by someone else, or filing Form 2555, Foreign Earned Income, or Form 2555-EZ, Foreign Earned Income Exclusion. All right, let's wrap things up for today with some final thoughts. The Earned Income Tax Credit can be a great financial boost for those with low to moderate incomes. Yeah, there are a number of qualifying criteria, sure, and it may have been confusing to list them all out today, but most people who meet the income thresholds should qualify. Keep in mind that you must actively take steps to claim the EITC on your tax return, since it's not automatically claimed for you. But even if you forgot or didn't even know it existed, you can go back up to 3 years to claim the EITC. That could be pretty lucrative. Once you're ready to claim your credit, make sure that you don't overpay for tax filing services. We have our favorite tax software you can check out to find affordable and capable options, as well as more resources. Again, I talked about that chart that shows all the income thresholds for the EITC, and a whole lot more at thecollegeinvestor.com. Please subscribe and share this podcast with others you feel could really benefit from it. Also, you can follow us all over social media and say hi. We'd love to get to know you at The College Investor. Just put that in the search bar. Anywhere you are, we're there too, for the most part. Have an awesome day. Thanks so much for stopping by, and we'll talk to you again real soon.